Yes. What's up, everyone? How is everyone doing? How is everyone doing? Let me see. Let me see. Good morning, good afternoon, good evening, wherever you're from currently. Good evening. Marwan, what's up? What's up? How are you doing, Mark? How are you doing? Andreas, Narish, love to see it. Love to see it. Love to see it. Marian, Amir, man, too many familiar faces. Love to see it. Love to see it. Thanks for yesterday. It was amazing and explained it in very... Love to see it, Marwan. Love to see it. Groeten vanuit de zuidenburen. Love to see it, Koen. Love to see it. Welcome, 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 everyone. Good morning, good morning. Good morning, Murthy. Amir. Good morning, good morning. Good afternoon from London. Love to see it. Love to see it. Oy, 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 oy. Love to see it. It's going alright, Adolfo. It's my Spanish classes today. Mwah. It's going alright. Slowly picking it up. Slowly picking it up. Love to see it though. Thank you for that. Thank you. Thoroughly enjoying the MFT content. So much clarity and learning going on. I killed this week in my own trading as well. Love it. Let's go, Jason. Keep me updated on that one as well. Love to see it. Absolutely love to see it. Let me see. Where are we? I'm doing great, Phil. Thank you. I'm doing great. Doing great. How are you doing, Phil? How are you? Let me see. We got a €1 donation. My man. Oh my god. Again, there's no need to donate at all. No need to donate at all, my friends. I appreciate that a lot, though. That means a lot to me. Thank you for that. Thank you. That is crazy, though. That is crazy. Thank you for that. One of the best market maker. Love it. Love it. One of the best market maker models video. Love to see it. South Africa, Thailand. Oof. Been with a money making team for a week now. Learned more in 1 week as compared to several months watching hundreds of others videos elsewhere. Love to see that. That is a huge compliment. That is huge. Wow. That is insane. That is actually insane. Love to see that. Man, Marian, appreciate that a lot. Thank you. Again, there's no need for it. No need for it at all. But thank you for that. Thank you for that. I appreciate that a lot. It means a lot to me. It means a lot to me. We need breakaway gap. Breakaway gap is actually very interesting. As in, breakaway gap is usually just the thing that happens when a flood is preventing us to trade into an odd. What we talked about yesterday. And what I mean by that is then what happens is the flood is a breaker or an order block. And above that, the odd. Above that is a fair value gap or below it, of course. It's very interesting. Let's see, where are we? Man, love to see it. Wish you could drop more videos a week, love. I wish I could do it as well, but you know, my brain also has a limit sometimes. And my time has a limit mostly. If I had unlimited time, if I didn't have to sleep, imagine that. Would be insane. Then I could do it. Oh, love to see it. Let's get it started. Then afterwards we'll go over questions, etc. Now, I want to mainly pay attention as well to the context, to the market maker model things that we talked about yesterday, and how we use that on the lower time frame as well, because I didn't go into the lower time frame too much when I watched back the video, and correct me if I'm wrong, and if it did make sense, but I didn't go into the lower time frame too much. But essentially what you're doing on the lower time frame is the same exact thing as you're doing on the higher time frame. The only thing is that you're just looking for an entry. So it's very easy. The lower time frame is very easy. The higher time frame is where it's the most difficult. That makes sense. What's up, Sawit? I love to see it. Appreciate that a lot. Appreciate that a lot. Marina, how are you doing? Was full of gems. Love it, Roderick. Love it, love it, love it, love it. From India, love to see it, man. Love to see it. Yeah, it's a great question, Dark MX, and I will go over that right now. So if we start off with the dollar, then what we saw on the dollar, we mentioned a weekly fair value gap that is sitting right there, overlapping with the high. We can potentially continue higher off of that. Now, that is exactly what we are seeing currently, where we can now expand towards that high and that high as well. This high is pretty far. for this week to reach into. But this high is a very nice weekly target as well. So I would aim for that high first right there. That is my first target for the week. The economic calendar is looking very nice. Now last week, if you remember, we mentioned the economic calendar was absolute garbage, as in it was horrendous. So, and it was funny because it was after the time and price video as well, which was very coincidentally. And it was a perfect timing because you could see how important the volatility is in a week. So you saw that after CPI, then the volatility came into the market, and that is exactly where I wanted to get involved. But the beginning of the week was just very, 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 very weak, you could say. So that was very funny. Whereas in this next week that we are heading into is having a very nice economic calendar. So do not be afraid to get involved. Of course, look at the day. Look at the day where we have news supporting the ID, etc. That is as well very important, of course. Now, we have a daily fair value gap here on the dollar. Will we reach into that daily fair value gap? I am not too certain of, because if we look at the economic calendar is supporting the idea of already trading on Monday, which means that Monday might not be a consolidation, which also means that we might just expand higher already here. If that happens, then on the 4 hour, I might be interested in a 4 hour fair value gap already without looking at that daily fair value gap. Because if we do remember the story of the fair value gaps, then the fair value gaps, for it to retrace right there, if we expand higher a little bit, for to retrace into that daily fair value gap, it's very low probability. As in, you will likely not see that happen because it's very easy for price now to expand higher right there instead of making that forced retracement, because it doesn't need to retrace right there and then continuing higher. Might not always happen. So keep that in mind as well. Again, very bullish on the dollar right here. Now, if we go over ES and the indices itself, then I'm also very interested because, and I will go over the monthly first because we did have that question. So on the monthly, we were inside that monthly fair value gap right there. Now, if we read the stories of the monthly fair value gap here, then this monthly fair value gap is just basically, very simply said, getting disrespected. As in, that monthly fair value gap will not be the reason price will push higher. So price will seek another discount rate that is below that monthly fair value gap, which might be in the form of this right there, which we can reach for below that low as well. That could be interesting. That lines up with the dollar potentially reaching above that line right there, which is the weekly swing high that is sitting inside the monthly fair value gap. So that could be very interesting. Now, how can we deliver towards that? We had the weekly fair value gap sitting right there, which we talked about last week, overlapping with as well an order block, which is very nice. So we came into that. We expected a drop during CPI or FOMC. After that, the volatility comes into the market. This daily fair value gap is not that relevant. As in, of course, the weekly fair value gap is stronger. So we have context. If we go over the context, we just have very simple context. Weekly right there. Weekly fair value gap, weekly order block, towards that weekly low that is sitting right there. And eventually this low as well. So what happens is, in between this price action, that is where on the lower time frame, your market maker model forms. But of course, you need to combine the time frames correctly. As in, you need to constantly be aware, once we are going lower, which fair value gaps are we leaving behind? Are we leaving behind a daily fair value gap currently? No. So we don't really have to worry about the daily just yet. Are we leaving behind a 4 hour fair value gap currently? No. So we don't really need to worry about the day or about the 4 hour or about the daily just yet, because there's no reason to come back higher currently on those time frames. Are we leaving behind a 1 hour fair value gap right now? Yes. We are leaving behind that fair value gap, which we could very well sting into, because if we remember, this lag right there is currently low probability, as well as that lag. Why? Because it's not creating a daily 1 hour fair value gap lower currently. So until we do that, those highs are low probability for it holding. So equities open could very well do something like this, but I am very bearish. That also means that when I am very bearish and I'm expecting just a market maker model, because essentially all we talked about, but we didn't need to pay attention to it. And that was the beauty of it, because that's what a lot of people do. They mark out that original consolidation. That original consolidation, we already determined it based on the weekly. it doesn't need to be a consolidation because that's not relevant, because it's going to deliver there either way. It doesn't need to be an original consolidation. Then the high right there, this is just our ST, where we sweep a fake top right there. That fake top is something we will discuss in the next video. But if we first study the context, so what I would love for you all to do is this week, just study the context. That will be a lot, because every video that I put out, then we have a week on that topic. So the next live stream, I also want to talk about the context constantly. Context. And the next video will be reversals. So then a whole week, we will only focus on reversals. So right here, this is where we have that ST, where we have that reversal. But all you need to know is that we first have that PD ray to that PD ray. On the lower time frame, inside that PD ray to that PD ray, we will create a market maker model, as in this will be your original consolidation. This will be your ST. And then afterwards, you just have, like we call in the mentorship, in the money making team, those are re-entries right there. But it doesn't need to be that complicated. It doesn't need to. And although, of course, it might not really be complicated, but it can be simplified even more. As in, this right there is just your opposing discount array. It's not your original consolidation. It's just an opposing discount array. This is just your ST. That is your reversal cycle that is happening right there with the fake top, the ST right there, and then we create the real top. That is important to understand. So now we can just follow through. Then it's also important to understand that if we constantly do this, which we might do, but if we constantly retrace to the top right there, like we are doing right there, then that might not happen all the time. As in, you will usually see big retracements at the beginning of the move. And then you will likely see, if that happens at the beginning, or it's the opposite. If it doesn't happen at the beginning, you will likely see it in the middle right there. But if it happens in the beginning, big retracement, then the middle I want to expand lower. And the reason for that, if we do retrace constantly like that, then we are clearly showing a lack of momentum to the downside. So I want you to be aware of that as well, that if we do constantly retrace like that, then I might not be that interested, because then I might say, all right, we are having a lack of momentum to the downside. We might just continue higher right there. So that is also very important to understand as well. But this is looking very nice for lower prices. Then the same thing, NASDAQ, we're seeing the exact same thing. The only thing is here that we were already disrespecting this weekly fair value gap right there. Then we came into that daily fair value gap, which I had as target on a CPI right there. I had as target that daily fair value gap. So we delivered into that. We swept that fake top that was sitting right there as well. Then we had the real move lower. That is very nice. Now we can come into tomorrow, potentially already. Come into that low right there, that order block low. Continue lower off of that, which is also a 4-hour order block with potentially a 4-hour fair value gap right there. Now that 4-hour fair value gap is the only thing it needs to trade into. Then again, it comes back down to time. As in, equities open, does it spike into this order block or into the fair value gap? Currently, I couldn't say which one it does want to spike into. The only thing I could do is when the time is right, so equities open tomorrow, then I want to look at, all right, will we spike into that or spike into that? And then I just look for my entry pattern. That's it. That's time and price. So that is very interesting as well. That is looking very nice. Then the only thing is that YM is coming into that weekly fair value gap as well, which we talked about right there. But YM is currently not really dropping lower, as in it's the stronger one. It's not really weak, which means that I would prefer taking shorts on NASDAQ and ES currently just because they are weaker, just because they are leaving behind clear premium arrays right there. Again, this could be interesting, but I would need a little bit more price action here to work with, new bearish fair value gaps to work with lower, and then it might be interesting as well. But indices are looking very nice, and DAX is also looking very nice, and I haven't said that in a long time. Especially if you're in the money making team, you know how much I've hated DAX for the past months, even though I love trading DAX. And if you've been here on my YouTube actually for a long time, you know how much I love DAX, especially at the beginning of this year. Then we saw a sweep of that high right there, which we talked about. We did not come into the daily fair value gap, but this is when, it's funny because we got the question actually earlier on, about the breakaway gap. This is a breakaway gap. Now, how can we know it is a breakaway gap? We don't necessarily need to know. But the thing on how we can anticipate it to be is because we have a discount array, or sorry, a premium array that is sitting below that other premium array, which is the fair value gap in this case. So this premium array in the form that high is preventing us to come into that fair value gap. Perfect. So we don't need to trade into that fair value gap. That then becomes a breakaway gap. That can be in a lot of scenarios as well, where it could be a little bit different. But right here, we can deliver towards that low right there. So all I'm doing is that premium array to that discount rate. That is where your market maker model forms on the 4 hour right here. On the 1 hour, all you need to do is be aware which time frames are in context, as in where are the fair value gaps forming, where are the order blocks forming. You need to be constantly aware of that. So you don't go into the 5 minute to look for shorts. No, you need to be aware. Where are the fair value gaps? Well, we have a beautiful 4 hour fair value gap hovering above price. Once we sting into that, then we also have new context inside the other context, which is from that premium rate in the form of that fair value gap towards that low. So Monday right here is already very interesting, because if we sting into this right there, and especially 3 a.m., 3 a.m. is very volatile for DAX, then on 5 a.m., on the 5 minute, we can look for a potential entry pattern to go lower. That is very, very interesting. And then, of course, eventually targeting all those lows right there. It's looking very nice, actually. Haven't said that about DAX in a long time. So here on Australian dollar, US dollar. Now, the only thing I'm seeing is if I first go into the 4 hour, then I do quite like the idea of coming into that order block with that 4 hour value gap and continuing lower off of that, because we're that close to the drawn liquidity. So I do think we are first reaching that drawn liquidity right there. The only thing I'm not liking, that once we take that context low right there, that we have a daily fair value gap that's above it as well, but we have a monthly fair value gap still sitting there. So in my opinion, there are currently better pairs to trade out there. Now, if you are trading only Australian dollar, US dollar, for example, then it is still fine to trade, because then you can incorporate multiple time frames, etc. So that could be quite interesting still. But right here, I want to be very careful on Australian dollar, US dollar. Not a big fan of it currently. I would prefer EU or GU or any other US dollar instrument or pair, which is very interesting because the dollar has a clear drawn liquidity, which means EU right here, like we talked about last week, we had a sting into that low with the fair value gap. That is, of course, the important part, the fair value gap. Then we can just continue lower because now we have, again, new context. Weekly premium rate, weekly discount rate. And we also have that monthly fair value gap that is sitting right there. So if we look at the daily, do we have something to work with on the daily? Well, we are potentially creating, or not potentially, we have this daily fair value gap right there. Here again, same as on the dollar, just inversed, of course. It is very important to be aware that on the 4 hour, we do not have a 4 hour fair value gap lower just yet. So immediately this lag lower, based on the video, on the previous video, this lag lower is low probability. First off, because it does have a fair value gap lower right there, and it is not in context of the daily right there. Again, there's two things that can happen in this scenario because we are pretty close to the drawn liquidity. So if we have a sting into that daily fair value gap, I will be interested in trading off that daily fair value gap to continue lower. But if we create a new 4 hour fair value gap lower right there, I will be interested in trading off of that. Once we take this low, that context low, that weekly context low, I will be going into the daily time frame to look if there's a daily fair value gap overlapping with those lows to continue lower. But it depends on if we already reached the monthly fair value gap. Because if we reach that monthly fair value gap, I want to again take a step back because I don't know how big the rejection will be of that monthly fair value gap. So that is something I want to be very aware of as well. Something I want to be very careful of. But this is looking quite interesting. It just depends on throughout the week, and I will also update on Tuesday because we have an extra live stream on Tuesday, 11 a.m. New York local time from every week from now on. And the video will be on Saturday and, of course, Sunday, our usual live stream. But that is also something I will update on. All right, let's see. GU, the exact same thing, right? We are coming into that low with the weekly fair value gap, even cleaner, you could argue. We have that weekly discount rate, that low as well, right there. Absolutely beautiful. Then that daily fair value gap is something we can trade into. It's the exact same scenario on EU, but the thing is we have a 4-hour fair value gap already sitting right there. So I want to see how do we reject off of that. We might still come into that order block as well. Seeing what we do there. Want to be a little bit careful there, but there are opportunities. Just being a little bit careful on how we are reacting right there. But again, looking very interesting. Of course, this low, the main target of the week, because this is just your whole market maker model. As in, this is your original consolidation, but you don't need to call it that. This is your buy side curve of that market maker sell model. This is your ST, which indicates the reversal in the market. Then you have your re-entries right there. Those are your eventually the continuation, the second distribution, the blah 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 blah, the enigma, blah blah blah. And then eventually we deliver towards that original consolidation. And that completes your market maker sell model right there. That's all it is. But we classified it as even simpler. And without losing any magic of it, as in it's still the same, it still is effective. USD Canadian dollar, I really like this as well because we have a daily fair value gap higher that is sitting right there. Now I want to make this one as well a little bit clearer. We have that daily fair value gap right there. The only thing is I don't like this bottom. As in, if we look at this bottom, this is a typical fake bottom for me because we have a daily fair value gap sitting right there as well. I don't really like this, but if the dollar just wants to expand higher, then USD Canadian dollar could very well just come into the daily fair value gap right there and continue higher. The only thing is that if we have Canadian dollar CPI as well this week, actually, if we do something crazy and we do sweep that, then I will be more interested in it because that daily fair value gap with those lows right there, I'm not too sure on that. I'm not too certain about that if we do want to respect those lows currently or if we first want to sweep it and then continue higher. So that is something to be aware of. But overall, I'm very bullish on this as well. USD-JPY. So I actually like this USD-JPY, and I'll tell you why right here. We're coming off that weekly fair value gap. Now, when we have a huge news spike on that Tuesday, the 3rd of October, a huge news week, I just ignore it. You don't need to pay attention to that. And what then happens is we come into the weekly fair value gap again right there. And that is the real tap into the weekly fair value gap. Once we continue higher off of that right there, then what we can see is we are creating a daily fair value gap off of that. Daily fair value gap, premium array, that is again your context right there. So that is where you can look at the 15-minute to on the 15-minute, you can look at that daily fair value gap right there to look at your market maker model higher right there. And the market maker model is very easy again. It's just ST and then basically just following the high probability lags higher, which we talked about. If you follow those high probability lags, that's all you need. It's very, very simple. So your USD-JPY is also looking quite interesting. Now, silver and both gold. I'm going to talk about both of them simultaneously at the same time because I am not quite sure on what we want to do right here. And the reason being is because I expected lower prices of that weekly fair value gap, which we seem to have gotten during FOMC right there, or during CPI a little bit as well. But then we didn't follow through. And the dollar is also going higher. The dollar is going higher and silver and both gold are also going higher. That is, you could call it, that is a crack in correlation. What is it? How is it called again? It's not in sync. It's not in sync right there. As in, dollar should be moving higher, then silver and gold should be moving lower. Of course, in a utopia, in an ideal world. When that isn't happening and the dollar is moving higher, then am I also going to say and sit here and say, well, silver and gold could also be going higher? No, because then I'm basically speaking against myself. As in, I'm telling myself the opposite things. I'm a hypocrite. You could call it. So maybe a little bit of exaggeration, but you could call it like that. So in that case, I'm just not too certain on what we do want to do here. We could be continuing higher, but the dollar is going higher. So it doesn't make sense for silver to continue higher right here. So I'm not too certain on what we do want to do here. Same exact thing for gold, where I've marked that high because I think, all right, we might be reaching for that high. We might be reaching for new highs. But with the dollar going higher, who knows? I'm not too certain on what it wants to do right there. So right here, I want to, if I was to trade silver and gold, I would make use of the 1 hour right there to have very quick scalps. Very quick scalps and then get in, get out. That is what I mainly want to do. That is very important for me. But currently a long-term bias right here or a weekly bias, I really can't really get to it. All right, Bitcoin. Bitcoin right here. So Bitcoin is actually quite interesting because we are coming off that monthly fair value gap. Now, inside that monthly fair value gap, I mentioned that I either want to have a daily fair value gap higher or daily fair value gap lower. That will indicate a lot. That will indicate what it likely wants to trade towards first. So we have a daily fair value gap lower sitting right there, which means for me that we will likely see first lower prices before we might actually come into the monthly CB right there. So that low would be my target for right now. And that is again your monthly context potentially right there. So when you have monthly context, you have a lot of context to work with on a weekly, daily, 4 hour, the 1 hour even. It's a lot. So what you have to do, you have to take into account those time frames to see where are the fair value gaps. That is the most important part. All right, crude oil. This one, we have a monthly context, as in monthly fair value gap to that monthly high to that monthly fair value gap, most likely. Which means we have, again, a lot of price action to work with. Daily fair value gap right there could be very interesting, higher. And then the 4 hour as well, 4 hour highs, 4 hour nested order block, 4 hour fair value gap. That's 3 discount arrays right there. So that is very strong. That is a very strong level right there to continue higher off of. That is looking very nice as well. I really like this. We remove some noise. That is looking very nice. I really, really like this one. Nifty. Yes, perfect. So Nifty as well, quite interesting. We are currently respecting that weekly fair value gap that we mentioned. Now, off that weekly fair value gap, we can continue lower towards those lows and towards those lows and to eventually the monthly target as well. Monthly overlapping high. That is my main objective right there, my main target. So that is looking very interesting as well. And right here, you can already tell on the 1 hour, we already have a 1 hour ST. So a 1 hour a new fair value gap lower, that is just your entry right there. And that is your market maker model that is right now forming, your market maker sell model that is potentially forming, of course. So we have quite a lot of opportunity this week, actually. Quite a lot of opportunity this week, which is very, very interesting. All right. What are we saying? What are we saying? Why does a fair value gap work? What actually happens? Can you explain? That's a great question, actually. It's a very interesting question. And the way it's always very vague. As in, I can say how I think it works, but I'm not the market maker. As in, I am not the one operating or anything. I'm not sure who's behind it. I think no one really knows. So we're all speculating. So I'll give you my thought on it. There's 2 ways you can see it. As in, usually fair value gap is also referred to as an imbalance in the market. And it depends on the theory you're looking at, actually. That is why it's quite interesting, because if you're learning supply and demand, it's an imbalance in the market. And an imbalance in the market with supply and demand should always get traded back into and should always get filled to offer fair value, to offer fair prices. But from an algo standpoint, from a liquidity standpoint, it is also an argument is being made that there are orders from banks, etc., that can be mitigated and that can add on to that. So it really depends on which theory you are looking at. Supply and demand and liquidity theory are a little bit different. So in that case, I just know it worked. But in that case, what I like to think is, all right, we are leaving behind an imbalance, which is not fair value. The market always likes to have some kind of fair value in the market. So when we are leaving behind an imbalance, we should offer fair prices to market participants, as in one side of the market moved too fast right there. which means that certain market participants didn't have the chance to get involved. So we are offering, again, fair value to then continue higher or continue lower. That's how I like to look at it. Let me see. Not sure how, if you touched on this already, but how would you enter a continuation after a news event? That is a great question. And it really depends on the situation as well. As in, for example, it really depends. Let me find a good example, actually. A news continuation, for example, once we have a news continuation, what we saw here during CPI, we were just continuing lower right there. For me, I want context, as in I always want to trade off of some context, which means I always want to come into a fair value gap or any premium array first on a significant time frame, not just a 5-minute time frame, but a significant time frame. So it's everything in context again, for me to then go into the lower time frame again. So me trading a continuation of news is just very much waiting. It's waiting for new context to get involved again. Again, the weekly right here, you could also get involved off the 1 hour already. But the 4 hour right there, that is where I would like to get involved. That 4 hour fair value gap that we had right there. If that does make sense, of course. That does make sense. Let me see. Hi, Ario. Thanks for great. No worries. Love to see it. You're the best. Thank you. Question regarding a NASDAQ. It came out to the 4 hour fair value gap. Didn't offer 5-minute entry pattern or 15-minute setup. Let me see, my friend. Let me see. 4 hour fair value gap right there. Mainly touching on that right there. 5-minute, because that is something you can see. And this is actually funny because the part where I showed, where I was talking about me taking this trade live or trading this live, I was actually trading this live right here, and the mentorship now has the breakdown video as well. But the thing is right there, I also actually missed the entry right there, because I missed that entry. I did not get in. I did not get tagged in right there. I missed that entry, and price was just leaving me behind, which happens. It just happens. Which on ES it did provide the entry right there. So it's just picking our poison at that moment in time. It happens. And the main thing I was looking at was on the 1 hour as well, on the 1 hour right there, because I prefer to trade. I'm not sure if you're in the mentorship as well. If you're in the mentorship, then I prefer to trade the flow trading plan for indices instead of a filtering process trading plan. Let me see, Papa. Let me see. USD Canadian dollar. We have a weekly fair value gap below. Let me see. That weekly fair value gap. That is actually a great shout. So we do still have that weekly fair value gap right there. That would only reinforce the idea for me that these lows are just. I don't really trust them. Don't really trust them right now. Don't really trust them. So that reinforces the idea of trading off that daily fair value gap. If the thing you could do right here is, I always tell people in the mentorship as well, when in doubt, you wait for a new fair value gap. So what that means is that if you have the daily fair value gap right there, then off of that daily fair value gap, just wait for a new 4 hour fair value gap higher, and then you can trade off of it. So in that case, I would just wait. We just wait. An ST is a sharp turn. An ST is a sharp turn. I will touch more on it in a reversal video as well. ST is a sharp turn. Indeed, Hope. Thank you. About macros. I don't really use macros, to be honest. Because I don't really think macros itself. I touched a little bit on time and price, and it was a little dig at macros potentially, but I don't really think it's relevant macros. As in, let me explain why, because I really haven't explained why. I just sometimes just say things that is not relevant, but let me explain why actually. So if we go over the GU 1 hour scenario right there, and let's say we have a macro. Now I know macros mainly go over indices as well right there, but let's just say it's the same scenario. That if we look at the 1 minute, and if I was just looking at the 1 minute right here, then I could say, all right, this 9 a.m. macro right here provided that setup between 9 a.m. and 9:10 a.m. Provided that setup right there. That was my macro. Well, that it could be it, but the most important part is that we are having context, as in we are coming off of a premium array on the 1 hour right there, which just leads to a new discount array. So that 1 hour right there is your boundary to go into the 1 minute time frame. So if you're using 1 hour PD arrays to go into the 1 minute time frame, you don't need macros, as in these 1 minute setups right there will happen regardless whether you are paying attention to your macro or not. So that is very important to understand. So these setups right there, they are not happening because of your macro right there, or could be happening. I'm not sure. Again, I might be clueless about the market, but right there, that is the most important part, that setup is happening. So I don't need to pay attention to those macros. But if you're only trading on the 1 minute time frame, then the macros might be relevant, because then it's your boundary to look at a potential entry. Again, you have two kind of boundaries, as in the boundary here for your macros could be that macro time, but the boundary most of us use is just a PD array that's to the left right there to continue that market maker model that is forming towards that low right there. So then the macro is not relevant. But if you don't have a boundary and you're just looking at the 1 minute time frame all the time, then the macro could be a boundary for you to go into and look for an actual entry. That makes sense. What made you trade private equity and not prop firms? That's a great question, and there's not really a reason behind it. Although the rules are, of course, a little bit more easier to deal with, as in I don't have to pass a challenge. But the main thing is just it came by, as in it just was on my path, and then I decided to do it. If that makes sense. Yeah, there's not really a reason behind it, I would argue. Let me see. Euro, New Zealand dollar, and GBP, New Zealand dollar. Oh, this is 1 minute. Let me see. What are we doing? I want some context on the weekly. What are we doing? On the weekly, I actually looked at this, and on the weekly, this is a very clear drawn liquidity. As in that weekly value gap, I'm pretty confident that we will trade into that. What will happen after? Not too certain. We did get a sweep of that fake bottom, which is very nice actually. It looks pretty nice. On the daily, we can look to deliver. Now, the reason I did not select this, as in I'm not really interested in trading it right now, is because we do have daily value gaps right there, but those daily value gaps are too far away for us to then reach into the drawn liquidity. As in, I would first expect a move into the drawn liquidity and afterwards potentially into a daily value gap. So on the 4 hour here, you can potentially look at a 4 hour value gap, 4 hour order block right there to trade into the weekly value gap. But just know, the reason why I wasn't really interested in it, that we still have daily value gaps below it as well. So then it becomes a bit iffy, but that is looking quite interesting. It is looking quite interesting because the drawn liquidity is very, very clear. Sometimes the drawn liquidity is very clear, but the PD array, as in the second stage of that context, is sometimes not really clear. And that is also when I try to avoid certain pairs. But again, what might not be clear to me might be very clear to you. So do your own analysis as well, is what I would say. Let me see. GBP, New Zealand dollar. We are currently inside this weekly value gap. Now, I'm interested to see how we rejected there, or if we did. Nothing at all. So currently, I want to see and I want to wait. What will we do? Will we respect those daily value gaps right there? Because I do expect some kind of rejection at the beginning of the week. And will we continue higher with a new daily value gap, or will we just explode lower again? If we explode lower there on the weekly, then I would like to use a 4 hour value gap lower that is sitting right there to potentially get involved as well. But right now I want to be a little bit careful. And the main reason of being for that is because we did reach that. I'm not really sure what we do want to do here. The monthly is not really clear. So we could be looking at shorts as well. Could be quite interesting. I smell Dutch. You smell correctly, my friend. Your nose is working perfectly. Yes, the heavy Dutch accent is here. CHF JPY. So this one is really interesting. Re. It's funny that your name is Re. But this one is really interesting right here because we have that monthly context like we talked about. The drawn liquidity is stupidly easy, as in it's very obvious. Like we will trade towards that high. I'm willing to bet some money on it, and that's usually what I do because I trade. So right there, that is what I would want to trade towards. And here on the daily time frame, the only thing is we have that daily value gap right there. But the thing is right there that daily value gap is too far away for me to look for price to trade into. Now, on a 4 hour right now, if we have a clear discount rate, which is the same case, I just mentioned that we do have the clear drawn liquidity, but the PD rate is just not that clear. As in, it's just not super clean. But if we do want to continue higher, 4 hour value gap potentially at the right time as well. That is very important. I'm not sure if there's CHF or JPY news. Let's see on which day we have that. CHF, JPY. Do we have CHF, JPY news? I don't think so. No, we don't. All right, that would already make me really disinterested, because if we know what happened last week as well, then there's just a lack of volatility. So I'm not really interested in this, to be honest. But if we had CHF, JPY, then at that day, I would look to trade into those highs right there. But we don't. Let me see. Where are we? Interesting hybrid. Interesting. Very interesting. Yeah, Marwan. For me, gold and silver itself as well. That Friday move, that's not something I saw coming. As in, I was expecting lower prices off of those 4 hour fair value gaps right there, which we did not get. So at that moment in time, I also stepped back. As in, I'm wrong right there. So I want to step back because I'm not too sure on what we want to do. And macros are a gimmick. That's actually a very interesting point. And it could be very true. Re are my initials. Love to see it. What did you actually say, Hughes here? Let me see. You mentioned something on the 5 months. I see. The 5 months in ICT learning and then coming here have changed my perspective to reading it. Love it, my man. Love it. Thank you for being here. And thank you for being active in the live streams as well. Love to see it. Love that. Yeah, sorry, Wahid. I mention AKA pretty often. AKA is just in other words, or you could say also known as. So when I say AKA, I just mean in other words, it's this. In other words, it's this. But I need to get rid of that word. Just get rid of it. Just need to say in other words. Love to see it, Saweet. Love that. It's a great question, Izon thing. Excuse me if I mispronounced that. Ario, do you put your stop loss at the body of the candle? I sometimes do. And that really depends on the scenario. It's a bit subjective, you could say. And I hate that it's subjective. But the thing I sometimes do is, if we look at the 1 minute right here, then because the original stop loss, if you remember the video, was actually supposed to be here. It could be here, but I just do it above the bodies right there. Because a lot of the times, when the bodies are getting traded above, then the wick will also go. So for me, it's just to squeeze out some little bit extra RR right there. Now, of course, in this scenario, I would still place my stop loss on my actual MetaTrader right there. Reason being, just to take into account spread. So on TradingView, it's right there, but of course, it's really right there on MetaTrader, but spreads, etc. might mess me over a little bit. So right there, that is how I want to go about that as well. So I do sometimes place it above the bodies, depending on if I want to squeeze some extra RR out. Now here, it could also, of course, in hindsight, it's perfectly fine to do something like this. But just that extra RR, because I think price has no reason to come back above that high, let alone those bodies, let alone those wicks as well. So I do sometimes do that, yes, for sure. Do you use inverse fair value gaps? I personally do not use inverse fair value gaps. No. I personally do not. US dollar index, is that the same as just, which one is that? US 30? US 30, if you scroll back a little bit on YM, then we went over right there. I'm expecting lower price on YM currently, with the weekly fair value gap sitting right there, continuing lower off of that. Its only thing is with YM, US 30 right now, is not really weak. As in NASDAQ and ES are weaker. So right here, I would want a little bit more price action to the downside right there to confirm the ID. Which means just bearish for backups. 100% Philip. I can look at some crypto. I can. Where are you checking news? Can you show us? Yeah, for sure. It's Forex Factory. Forex Factory. It's forexfactory.com. Let me paste the link here. It's this one right there. forexfactory.com. And then I have my filters set to the Chinese one is off for me, the currencies. Then I have everything on except for the yellow folder. And that's it. Let me make a screenshot of it and I can paste it on my TradingView chart as well. Let me see. These are the settings that I have right there. forexfactory.com. Let me see. Let me see. Love to see it. Love to see it. Yeah, exactly, Sadak. I was not expecting that. Not expecting that. After those 2 years, I realized that it doesn't make sense if everyone is trading sport and why is it so inconsistent? Yeah, Kamari, there's you're opening up a rabbit hole, my friend. But yeah. You're opening up a rabbit hole. What do you get extra in the money making team? Are there like Zooms/live where we can ask questions? Yeah, it depends on the package you choose. So the essential in the money making team is already the whole full package, meaning that the videos you get inside the money making team are next level. You get to see exactly what I'm looking at, as in you form your own unique trading plan as well. Every video you watch, you get closer to forming your own trading plan that you can consistently use. Next to that, you also have videos where I go over inspiration for trading plans. No confusion at all. So after watching those videos, you have everything you need right there, which is absolutely beautiful. Then the masterclass is just a next step, which is the Discord involved as well, where we have live trading sessions where you can ask me anything in private, in the community, whatever you want. So that is the next step. If you want more information, then do also send me an email at info@ario.io. Let me paste it on the screen right there, actually. This email right there. If you want some more information on that. Let me see. Euro Australian dollar and GBP Australian dollar. Let's do it, Naresh. All right. This right there is the email. Tom. All right. Euro Australian dollar and GBP Australian dollar. So I'm actually pretty interested in Euro Australian dollar. That's why I have it on the green list. Ooh, don't tell anyone. Let me make this like a little bit clearer. Perfect. So on the weekly, we are seeing just higher prices. But the thing I like is we don't have bearish fair value gaps, which means already that there's no real bearish intention. So the high probability lag higher, we are still respecting it right there. So on a daily time frame right here, we can just look to target higher off of that daily fair value gap. That's as easy as it is right there. Daily fair value gap, continue higher off of that. That's exactly what I want to see. Of course, with news supporting the ID. So that could already be on Monday and Tuesday. Those days are very interesting for me on Euro Australian dollar right here. Then GBP Australian dollar, I have it on the waiting list. Yes, so this is quite interesting as well. We are in that weekly fair value gap, and this will be a separate video as well with high resistance and low resistance liquidity runs. And this is what I mean when I say it's a high resistance liquidity run. And what I mean by that, a weekly fair value gap right there. We also have that daily fair value gap. So right now we're stuck between two PD rates, as in we're stuck between that daily fair value gap and that weekly fair value gap. So right now, ideally, I want to wait for a new daily fair value gap higher or a new daily fair value gap lower. Once we have that, then it could be interesting again. But right here, I want to wait because between two PD rates like this, that is where seek and destroy conditions happen. If you want something to study on the rest of your Sunday, and study this. Euro Canadian dollar, because Euro Canadian dollar is the perfect picture perfect example right there, which I mentioned as well, that here you want to wait. This is not high probability, and I mentioned in the fair value gap video as well that if we have a fair value gap lower or higher right there, then it could be interesting again. So that's my main thought process. Shoes here. I currently do not have it, my friend. That's an interesting one. We might have to set a meetup one day in the Netherlands. That might be interesting as well. If there's not a 4-hour fair value gap after high time frame is reached, but there is a 60 minutes fair value gap, how do you trade it? So, John, that is a great question. And the first thing we need to acknowledge is that if I talk about the money making team, then we have 2 trading plans. So it really depends if you're trading a flow trading plan or a filtering process trading plan. Now, if we have a 1-hour fair value gap, and it depends on if that's a daily fair value gap, if that's a 4-hour fair value gap, or a weekly fair value gap, or a monthly fair value gap, it really depends in that case. Because, of course, if it's a monthly fair value gap and you only have a 1-hour fair value gap, that's not enough. That's not going to cut it because that's too low of a time frame. If it's a weekly fair value gap and a weekly high time frame PD rate, and you have a 1-hour fair value gap lower, then I would need another leg lower. So not just that one fair value gap, need another one. If it's a daily PD array, and then we have a 1-hour fair value gap lower or higher, that is perfectly fine to trade off of. Then, if I'm trading a flow trading plan, for example on ES, etc., then those 1-hour fair value gaps right there, those are perfectly fine to look for either 5-minute ST or 1-minute ST plus re in. If that makes sense. Gold was on, yeah, gold was crazy. Gold was crazy. Yeah, it does, Mark. It does. It does. It's pretty interesting. GBP Canadian dollar, Euro Canadian dollar. Did I do the wrong one, Naresh? Oh no, I did the right one. Okay. GBP Canadian dollar. Let me see. What are we doing right here? So, what is this? We are potentially continuing higher off of that context, but it's a very small fair value gap. The smaller the fair value gap, the less I like it. But that does not mean, again, that the bigger the fair value gap, the more I like it, because that's not true. But smaller the fair value gap, the less I like it, though. So right here, we are coming off this weekly fair value gaps, and it does not seem like we want to expand higher currently. So on the daily time frame, I'm waiting for a daily fair value gap lower. Once we have the daily fair value gap lower, that could be very interesting to take shorts off of. That is what I'm mostly interested in. Euro Canadian dollar. So this is the same exact thing. I'm waiting for either a bullish daily fair value gap or bearish daily fair value gap. Then I want to get involved in that. Matic on the daily. Let me see. Is this one? Or it's the crypto cap? I think it's this one, right? On the daily time frame. Let me see. Let me get some kind of context as well. We're coming into the monthly value gap. We can continue lower. This low is the target. On the daily right here. On the daily, I would say we can actually still come into that daily value gap to then continue lower potentially. Where it could leave behind some liquidity to then do something like this, but I would want to do it fast. Let's see, on the 4-hour, although we are close to the drawn liquidity. So either this, we continue lower, or if we do something like this, then I would want to continue lower. So either way, it's continuing lower. But just need to see what it wants to do right there as well. Yeah, sure, Ataturk. Sure. So when I say I'm interested in taking shorts, what I mean by that, and I should probably explain it better because it's very vague from my side. In my mind, it makes sense, of course, but people listening to me, they might find it very vague. So when I say I'm looking at shorts right here, the first thing I need actually is I need a fair value gap lower. As in, I need a premium array to look lower from, to take shorts from. That premium array is my boundary. The boundary meaning a boundary to go into the lower time frame. So when I say boundary, it's something that is there that allows me to go into the lower time frame. So if we have a daily fair value gap sitting right there, then that daily fair value gap needs to form at the right time. As in, if we have GBP or Canadian dollar news, which we have on Tuesday, perfect. So on Tuesday, we have GBP Canadian dollar news, on Monday as well, but Monday, that needs to form, needs to actually create the daily fair value gap lower. And then right there, that daily fair value gap on a Tuesday, I want to see a sting into it. And then right there, I want to see a 15-minute to high probability lags lower. Sting into it, something like that. That is what I want. So that is when I'm looking for shorts. That is my main thought process behind it as well. If that makes sense. Cardano. Let's see. What are we doing? Let me know if I am picking the right one here. Monthly as well. Monthly fair value gap lower. So next target, I do think is that low right there. On a daily time frame. Again, the same scenario on Matic, but this fair value gap is pretty high for it to now come into and then continue lower. If it does happen, I would still be bearish. As in, it's low probability for me, but I would still be bearish and look for shorts of it. But I would prefer something on a 4-hour right now to continue lower off that, to complete that run to the drawn liquidity that is sitting right there. But yeah, that is my main thought process. Who did you learn from? Ooh, I learned the basics from the man himself, ICT. But who do I credit? Mainly myself. And I think everyone should credit themselves. And it's not egoistic, but learn the basics from someone. And after that, go into your own chart. And Indeed said, trading is screen time. Yes, that is it. That is the main part that will learn you the most. But yeah. But if I had to credit someone for the basics I learned, then it's ICT. 100%. 100%. Is there an alert out there that alerts different time frames for fair value gaps? Oof. That is a great question. I'm thinking about something, as in, I believe someone in the money making team made something for that, but I'm not too certain on it. But I believe there might be something. Otherwise, it's a great idea as well. And there was a higher time frame indicator as well that people have here on this side of the chart, I believe. How can we fair value gap combine with Orderflow with timeframes, sir? It's a great question, and that's the most difficult part about trading, I would say, and that's why the indicator that D-Sharks mentioned is as well a great, ask on Discord for sure. And it's a great indicator to have when you're just starting out, because when we move from this right there, that high, which is just basically the weekly fair value gap, you could argue, towards that low right there, then the way you see order flow and the way you see lags lower is you constantly need to be aware that this Monday right there will do what? That Monday will form a daily fair value gap most likely. So once we form that daily fair value gap, you want to be aware on the 4-hour that this 4-hour fair value gap can push price lower. But after that day, so once we close that day, that Monday, we have a daily fair value gap hovering above it. So this could happen to then continue lower. So you're constantly monitoring every time frame to see where are the fair value gaps forming, what are we doing. That is extremely important. And then you're just basically following the fair value gaps lower. And that is very, very important. That is very important to do notice right there. And let me see if I can find an example. Because it's just, if we look at this lag higher right there, the push higher, then we constantly have, we constantly need to be aware of what the timeframes are doing as well. As in, and that's the thing I'm trying to tell people. It's mostly people that are trying to trade the 15-minute only, and that are trying to look at the 15-minute right there and trying to look at this to continue lower. Yes, of course, that could happen, but you're making it yourself very difficult because this lag, we can already know, will likely not hold. Main premise, 4-hour fair value gap is just above it right there. So you're making it yourself very easy if you just zoom out. And the higher time frame does not seem interesting, but it is very interesting because it's very easy to trade the 15-minute if you know that the 4-hour is likely just doing this simple move. So if that makes sense. If that makes sense, of course. Love that, D-Sharks. Love that, love that. Love that, Trader. Great explanation as usual because of or I got in depth standing up for value. Love that. Love that. Yeah, it's exactly my thoughts as well. Equantum trading. Exactly my thoughts as well. Let me see here on. So it's important to understand here that this would be an order block right there on the dollar. Oh, on the dollar right there. But the thing is, we have a daily value hovering below it as well. So we need to take that into account, as in order blocks are the strongest when they are in context. This order block right there is not really in context. Order blocks, essentially down candles that leave behind a fair value gap, or up candles that leave behind a fair value gap, of course. That's it. If they are in context, that is very important. So this up candle right there, order block. And they are coming off of a previous PD ray. As in, these are coming off of these fair value gaps, and they are creating those order blocks right there. So that is very nice. Order block as well right there. And are they in context? That is as well the important part. That's a great question. Do you always wait for the second fair value gap, or do you sometimes take entry on the first one? And do you re-enter if it takes stops? First thing, I don't take re-entries if I get stopped out. And that is mainly to protect my capital as well. Because I do notice that if I do take a loss and I rush back into the market, then usually it's a bad trade to begin with. So I don't like to do that. And then the second of all, waiting for a second fair value gap, that is usually what I do, but it depends on the context. As in, if I have a daily fair value gap and I'm looking at a 15-minute entry confirmation to have 2 fair value gaps, then I wait for 2 fair value gaps. But if it's a 1 hour, then I wait for only 1 fair value gap. Depends on the time frames right there. That is the combining the time frames. Love that skill, company. Love that. Appreciate that a lot. Appreciate that a lot. Yeah, I love to hear it. And I love that people actually, because it was a pretty long video and the original recording was actually 1 hour and 30 minutes for that video. And I did not expect it to be that long, but I feel like I talked about everything that I wanted to talk about. What was I doing? Bank Nifty. I wanted to look at Bank Nifty right here. Bank Nifty, we had that weekly fair value gap as well. I'm mainly still bearish on Bank Nifty, as in that low is my target and these lows as well, which are of course monthly as well. Monthly fair value gap right there. Those are my main targets right there. So if we already create a daily fair value gap lower, which then I would look to trade those daily fair value gaps lower. I do still think we can come into the weekly fair value gap. We'd have to see what it wants to do right here. And for Nifty, what I do, I tend to ignore the gaps and just see like there are fair value gaps itself. So this, for example, that right there is a daily fair value gap for me. That right there. This is not a daily fair value gap lower because it's only 2 candles. And of course, with 4 fair value gap, you need a 3 candle formation. So right there would be a daily fair value gap lower for me or higher for me. And then eventually we'd have to see, can we deliver towards this or can we immediately deliver lower? But I want to wait for shorts. Those are the highest probability in my eyes right now. Love that, D-Shark. Thank you for that. Thank you, thank you, thank you. Appreciate it a lot. Appreciate that a lot. It means a lot to me. Let me see. Let me see. Euro GBP. So I did not like Euro GBP past few weeks, and the reason being is because it's just consolidating. That's why I also have this line on my chart right now, the Fibonacci tool, because it's in one big seek and destroy motion right now. It's just not really expanding higher or lower. So right here, I would want to wait for at least daily fair value gaps higher or lower. That's the minimum, the bare minimum I would want to wait for. But currently, I'm not seeing really anything interesting. Could continue higher, could continue lower. Just not really sure. It's not really giving a clear direction right now. Yeah, millennium. It's very interesting. Crude oil, and mainly for longs. I'm looking mainly at longs right there, which could be very interesting. The shorts, not really, but the month for gap right there, continuing higher off of that. That is looking very interesting for me. That is looking very interesting. A NASDAQ right there, or US 100, I'm expecting mainly lower prices. Mainly expecting lower prices. Which the 4-hour value gap right there, that is what I'm mainly interested in. Right there. That is looking very interesting. On the 1 hour as well. That is looking very nice actually. Indices are looking very nice. GBP, JPY. For sure. Let's see. Let's see if we can look at that. Let's see if it has something interesting. Yeah. So I'm very interested in this as well, potentially next week. And the reason being, most for value gap still, I do still think we can deliver into that, but I just need a daily for value gap lower. Daily for value gap lower being created on Monday. Then if we have that Tuesday sting into that, perfect. That is what I would want to see. That is what I would want to see. For sure, the sharp turn, the ST, is the way I see it, and I'll end it with this as well. It's the reversal in the market. As in the ST is the first reversal point in a market. And the way I describe it, or the way I define it in the mentorship, in the money making team, is displacement in, displacement out. If you remember the fair value gap video, it's basically a fair value gap that gets disrespected by another fair value gap. That creates a sharp turn, an ST. A turn in the market that happens very fast, as in it happens really quickly. So fair value gap lower, fair value gap higher. The other fair value gap disrespects the other fair value gap. So that is basically an ST. That is basically a sharp turn. I will touch on it as well in the reversal video. Then I will end it for now, the live stream. I want to thank everyone that's here. If you have any questions regarding anything, regarding the money making team, again, you can send an email to info@ario.io. Enrollments will also open up in November, most likely again. Lifetime spots, of course, are always open, but keep an eye out, of course, for that information. If you want more information, then you can look into the email as well. I will happily go over any questions. If you have any simultaneous questions or any random miscellaneous questions, then I like to also answer them. So, and besides that as well, we have a live stream on Tuesday. So Tuesday, 11 a.m. New York local time. That is the extra live stream that we are planning as well. So that is very nice. This main week's topic. So if you want to go over the video a couple of times, that is great to do, because the main topic of this week is again that context. So that is what we'll pay attention to a lot this week. Then next week we have a different topic, etc. So we go by the topic. That is very important. So that is what I would love for you to do. Focus on that context this week. That is very important. Then I want to thank you, love you all, and I'll see you at the next one. Perfect. Thank you.